Everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index. Guys, I've been snake bit with technology. Yesterday, it took me forever to get the video to upload to YouTube. Today, I just got through doing the video, and for some reason, it's saved in uncompressed format, and I had a 2 gigabyte file, so I'm redoing this. But before we get into it, I just need to let you know that the website and the video are for educational purposes only. Nothing stated at either is intended to be used as investment advice. I can draw lines on charts. You have to draw your own conclusions, and you have to do that from your own research and make investment decisions that are right for you. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So here we go. The first thing I want to show you is we have been using this little red line right here kind of as our shot across the bow, if you will, that whenever this line breaks, that may be the first signal that the S&P may be headed back down for some type of corrective move. What's interesting with today's trading is this line that has been serving so long as resistance today was taken out. And why, you might ask? Well, I don't know why. It may be that this is a reactive move to the weakness that took us out of this pattern, and now that we're back, this pulled in enough buyers at levels adequate to propel the market a bit higher. But regardless of what it is, this line still hasn't broken, and right now where we sit at these levels, we actually have a lot of technically significant lines underneath us. So my feeling at this juncture is basically hang with it until these things down here start getting taken out. Obviously, the market is going to keep going higher. So if it ain't broke, don't fix it. I would expect at some point, I actually was kind of expecting it at any number of junctures in the past 3 or 4 days, expecting some weakness, but it has not developed yet. I want to show you one thing real quick, just a couple quick things. The first one is we kind of looked at this little 1, 2, 3, 4, 5, roughly 9-10 days of trading here from very late February through the 13th of March. It's not a very well formed pattern, but it's got a little bit of an inverse head and shoulders shape to it, and we talked about that. I didn't really want to key too much on that because it wasn't very well formed, but I'll show you that today, that if this is what this is, it's not a textbook specimen, but if that's what it is, it made its minimum target today and then started to sell back after getting a little higher than that. Additionally, this area where it turned back just sorta happens to be just about where the apex to this ascending wedge that we've been watching for a while. Now, one normally would not expect this top line to get taken out. Okay, you can see that this line worked as a strong resistance for, well, all year long. Okay, all year long. Starting actually with back in early December, then the markets rallied up to that line, sold off, rallied up, sold off, rallied, sold off, and even though that line moved just a little bit on me, there's a better and more accurate look at that line, how well that had been keeping things in check. Well, today we got over it. And again, I don't know if this is maybe just kind of a pendulum swing, that here we had the breakdown in this pattern, And then it only makes sense that since this swung to the low side, when it comes back and got back in the pattern, you can see there's that resistance again and again. But now it's gotten over this line, and I just, never say never, but according to everything that I'm seeing in the chart, I got no reason to think that there's much more zing left in this market. But we are blessed with a trigger line and an area of support to where we will know if these levels start getting taken out, then that would serve as effectively as a very nice trigger that this rally starting back here on the 7th is going to give way to some selling pressure, and we're going to come down and eventually probably test the 1370s, and if that breaks, then cut down to the 1340s. I don't think it's going to be a huge breakdown. I believe that since we are over this technically important line right here, and I'm ascribing a good bit of importance to this. We got a head and shoulders top here. That's where it starts. We got a head and shoulders top here. That's where it crosses next. And now we're over that line. We are also over the 1370 high. So it could be that 1370 provides some, I guess you could call it horizontal or lateral support in the 1370 area. Additionally, that's where these lines are right here. We got a couple reasons why we might expect that. So if the market were to come down, if the S&P were to come down, take out 1400, 1392, 1380, and then start to show signs of firming up and maybe even putting in some little bottom pattern, hopefully a little bit clearer pattern than what we got back here in early March, I still think there's an opportunity to go long. But where it is right now, I actually sold one of my stocks today, sold half of it, and I don't very often get a double in short order, but I got a double out of this thing and sold half of it, so now I get to just hold the rest as house money, and I'm just going to let it ride. Wherever it goes, and until it shows me it's that party's over. But look, I appreciate you taking time out of your day to watch this video. I wish I had something really cool and neat and esoteric to show you that pointed us in just a super clear direction. I don't. All I can really offer at this point is the market turned back right at about that apex level for that rising wedge that we've been looking at for a long time, and we are very close to this red line here. So I would say if we get weakness tomorrow and start to take out and start getting close to 1400 and take that out, then that's probably a sign that that we are going to give up a few 3-4 don't think much more than that, but about 3 or 4%. But anyway, look, thanks for watching the video. Thank you for your support, and I wish you well tomorrow.